Do a deal that you can live with. You may not like the rate. The rate you will be able to deal with, but if you put in structural limitation or handcuff, you're screwed, because then when things are over, how are you going to undo those? Young people coming into this industry do not believe this is forever, because nothing is forever. So be strong about the terms that you agree to during the tough days.
This is the Time on Wing podcast. I'm Courtney Miller with Visual Approach Analytics. With me, as always, is Garrick Deschavan of Collateral Verifications. Garrick, whose Time on Wing are we discussing today?
So we've got a great guest today. We've got Pam Hendry, and Pam Hendry is currently the VP and Treasurer at United Airlines. So we're very fortunate to have her on today. She's got a pretty good background, and she's actually, she kind of came from I don't know if it's the dark side or the darker side on the leasing side, and then went to the airline side. So that's kind of an interesting move there. But so she was kind of done a couple of different things. She was managing director at Plainview Partners. She was an advisor for Hudson Structured Capital Management. She was also part of corporate strategy for CIT. She was a CFO at Octagon Aviation Services. She was senior VP and treasurer for ILFC, a little leasing company some people may have heard of, where she spent most of her career. She was also senior auditor at Ernst & Young, and has received her bachelor's degree in business economics from UC Santa Barbara. And she's also a CPA. Just like us, she loves numbers, I think. It'll be great to speak with her today and kind of get her take on the leasing side of the industry as well, the airline side, which is, two great sides that we both deal with. So Pam, welcome, and this is your Time on Wing. So Pam, thank you very much for being on with us today. And so I don't know if you've had a chance to listen to some of our other podcasts. One of the things that we love to hear from our guests is just kind of how they got their start in aviation, where the passion came from. So we'd love to hear that from you and kind of get to hear where all of a sudden you decided to love airplanes.
Thank you for having me. It's great to be here. And my story is a little disappointing in that I had no interest in being in the aviation industry whatsoever. I wanted to be in entertainment because growing up in Southern California, going to school in Southern California, that was sort of the mantra. And when I started my career in public accounting, they put me on an aircraft leasing account, and maybe I cried for about 30 days because I really didn't want to do it. And I ended up loving it. And in those days, you could hire people from public accounting to join the company. And so after auditing them for a couple of years, I ended up as their assistant controller and ended up spending 25 years in the industry. But even then, I would say that I didn't know how much I loved aviation until I left it. And after ILFC was acquired by AerCap, and I took the package and I left and I started looking at other things, I had a few things that came my way. And what I realized is there is nothing like aviation. It is the best. But, the Dorothy Wizard of Oz theme is that, you don't really know it until you're away from it. There is nothing else that has the global footprint, the excitement, the volatility, careening from crisis to crisis, but always surviving. So it's addictive and it's a lot of fun. So it took me about 25 years to really fall in love with this space.
Yeah.
Can we go back? Hold on. I missed a step there. You had the dream to be in entertainment, and then you went straight to public accounting.
Oh, no, the entertainment accounting aspect of it. I wasn't going to, no.
Oh,
there was never going to be an actor or a dancer or a director. It would be,
never say
that's
never.
True, but I always had the realistic ambition of being in the entertainment finance world. Sorry, I should have clarified. Okay. Yes, that was as close as I wanted to get, but I did really want it. But unfortunately, they put me on that aircraft leasing account, and you never look back. So, yeah.
You would have thought 25, whatever years later, you're on the Time on.
Well, it's 35 years later, actually.
Wow.
Woo!
Full
Yes.
circle.
Yeah.
Yeah.
Yeah. Wow. Yeah, it's crazy for somebody that wanted to be in the and dealing with the entertainment
Yeah.
industry.
Yeah.
So, which part of the entertainment industry did you want to go after? Was it more like movies, or was it what were you interested in at the time?
All I thought was I wanted to work at a studio in some
Okay.
capacity. And so public accounting was a great way to access that, being a CPA and all of that. And it just didn't happen. And I did everything I was supposed to. I joined at the time a Big Eight accounting firm in Los Angeles that specialized in entertainment. But they had this little funky aircraft leasing company because somebody knew someone, and that's how they got the account. And people thought it was a really cool account, and so they put me on it, and I was less than interested. And, at that time, when I joined ILFC, I was the 22nd employee. There
Oh,
were
wow.
well, I take that back. There was one woman in management who was the general counsel who worked part-time because she was raising her family. And boy, was that a fiction. Part-time meant that she got paid part-time but worked full-time. And so that was sort of how I grew up in this space, long time ago.
Yeah. Wow. That's great. That's great. Yeah. Which, I mean, I have to say, I think, aircraft leasing is sort of like the entertainment industry. I mean, there's a lot of pretending, there's a lot of make
At
believe.
ILFC,
You're trying to
25
smoke
years
and
ago,
mirrors, special effects.
A lot of big personalities, just like those studio
Yeah.
heads you read about today. A lot of big personalities, larger than life, glamorous. And, when you think about all of the people who have made money in various industries, all figure out ways to lose their money quickly. And it's all making movies and starting airlines. That's like the best way to lose your billions. There are
Yeah.
all those jokes about it, and it's true. But it is a fascinating place, and it's because everybody knows something or thinks they know something about our industry, and they all want to talk to you about it. For better or for worse, everybody's got a story, and everybody wants to be involved. So it's a glamorous place to be.
It is. It really is. Yeah. It's definitely it's having been in the industry now for 25 years.
You're living the glamour.
Yeah. It's
aren't
definitely.
you? You are. You guys are totally
living-
glamour. Yeah.
Just look at him. Just look at him. He
mean,
oozes glamour.
Appraisers, we've got it made. Woo!
That's right. Jet setting all over the world. I mean, I will say that we do have a lot of, maybe not award shows, but certainly a lot of awards and conferences and self-congratulation. And that's also very common in entertainment. So see, this is really, it's very similar.
It is very similar. Yes. There's a lot of people that think they're
Oh, yeah.
celebrities. And they definitely walk around like they are. Yeah, no, it's a fascinating industry. But that's a great story. I didn't realize I thought there'd be something where you're like, you know what, I was on an airplane and I just thought this is really cool. You're like, no, I was put into something
It was
that I
kicking and
didn't want
screaming.
and ended up staying there for 25 years, that's pretty incredible. So you were literally from, I mean, how long had ILFC been? Had that been started when you started? It was probably
It had
just
started
pretty-
in 1973. It went public, I think, in 83, and we were acquired 100% by AIG in 1990. So I started in March of 89. And after I started, I was brought into the CFO's office and said, hey, I need your help because it looks like we're going to be acquired. And a lot of that was by design because the three founders had about 60% of the stock of the company. And Leslie Gonda, who was the elder statesman, he was doing planning, tax planning and estate planning. And so the idea of owning that much of a public company at the end of his life, and of course he lived for many, many wonderful years after that, but it was really all about estate planning. And so finding someone to buy us, and there were like 3 interested buyers. And my CFO said to me, I'm going to need your help because we've got to do this acquisition or this sale, and there's really no one to help me. And he said, you have to keep it confidential. And I said, and this was at the time, way back with Ivan Boesky and Michael Milken and all that stuff. And I said, well, there is no Club Fed for women. So I will be very careful about what I say and what I don't say. So we kept it quiet, and then that's what happened, acquired by AIG.
Yeah. Wow. Yeah,
And
yeah.
that's, my goodness, in the, so 89, 1990, I mean, that really, it wasn't, first of all, it wasn't that long ago. And second of all, it was several
Yes.
ages ago when it comes to aircraft leasing, right? I mean, it was yesterday and
Yes.
forever ago. Just think of all the things that changed, but 1990 wasn't, I mean, that was just
And one of the reasons that we, in addition to just estate planning, that we needed to be acquired is because we had a huge order book. And when at that time, one of the things that is so different today versus back then was access to capital. There was no access to capital. There were huge barriers to entry. And so when people would ask us, it was us and it was GPA, which became GCAS, obviously. And we never worried about competition because who had access to that kind of capital? And so being acquired by, at that time, a AAA company, they didn't guarantee our debt, but they gave us then that comfort for investors so that we could go out and raise all kinds of capital, which would otherwise have been really impossible. And fast forward, you talk about so many ages ago, now anybody can raise capital. Anybody can buy aircraft.
Yeah.
And maybe it's getting more costly to do that today with interest rates where they are. But they were artificially low after the global financial crisis. So it's so much has changed, which has allowed all of these new players over the last however many years because they could access capital. That's the fundamental difference between the industry today and when I was growing up in it, for sure.
Yeah. Yeah. Yeah.
And that, okay, so let's play this out. I'm gonna jump to the end here. Let's go forward with the assumption that the access to capital is not as easy as it was during the boom years of the last decade. What does that mean for, I don't mean for individual lessors. What does that mean for the size of the leasing industry, the overall number of competitors? If we're keeping kind of 1990 in mind, more from the macro view, how does this kind of fundamentally change the landscape on the leasing side, do you think? We won't.
Well, consolidation will continue. It has to. And I think that when I was after ILFC and I went to the startup aircraft leasing company, and one of the questions that I would always be asked is, well, where are we in this cycle? Because nobody wanted to look like an idiot and invest in this space if it was at the wrong point in the cycle. And I think investors hopefully have gotten used to the fact that it's a cyclical industry. It doesn't matter when you get in. You're just going to have to hold your breath and come in. And so consolidation, are there going to be people who just give up and think, okay, this is just too volatile for me. I can't make the returns that I need to. And especially if they are investing via funds that have short dates, are we talking about 5-year horizon? Are we talking about 10-year horizon? Are we talking about 20-year time horizon? And certainly there are different investors. You think about some of the Japanese investors who've come in over time where they had very low return hurdles, in part because there wasn't a lot of opportunity closer to home. But even that may be changing now. So I think that because we found ways to make people feel good about coming into this business, and we didn't put on the list of things to talk about the fiction of Cape Town, but that makes people feel artificially comfortable about their ability to repossess aircraft. That only works if people are willing to follow the rules. And gosh, we all know that sometimes people aren't willing to follow the rules. So,
not in our industry. We all follow the rules. Just
like
different rules.
The TSA. The TSA is there to make us feel safe, which, by the way, it works.
It does.
There's nothing against the TSA, but that's why Cape Town's there, just to make us feel
whether
good.
or not it works, gosh, it may be more. And
Right.
so I think that you're going to see more consolidation as you have people with really strong stomachs and people who just say, I'm out.
Yeah. No,
And
that's
by the
true.
way, the I'm out kind of feels kind of like giving up. It's not. It's wow, that treasury looks kind of sexy. I mean, like that's really close to what I'm. It wasn't like that before. Like there are
Yes, that is
alternatives.
absolutely true. Not for many years have there been these alternatives. And if we go back again to why did AIG buy us? It was for all of the tax benefits that we provided. And, those are still very attractive until guess what? You fully depreciate for tax purposes your equipment, and then you need to sell those aircraft or whatever you need to do. And guess what? It comes back and bites you in the ass, and you have a nice big tax obligation. And so you do have to keep feeding that beast as well. So,
Yeah.
people forget about that.
Yeah, what's wrong with mortgage-backed securities? I mean, that should be able to
That should
offset,
work, right?
I mean, just
Yeah.
go all in on CDOs. You'll be good.
Yeah, there's no problems there, but no, but it's true. Which and it's surprising to me that we haven't seen because of that we haven't seen more lessors place aircraft orders because that ultimately kind of takes care of that. Where, as you say, kind of keep feeding the beast. That's one of the ways to do it. As long as you've got an order book, as long as you've got airplanes coming in, you always have the depreciation that you can use, and you can keep moving along in the life cycle of a leasing company, right? But it certainly feels like I think you're seeing less and less of that, and I don't know if it's just because lessors feel like, oh look, we can't get our airplanes until the end of the decade, or and so therefore we still need to figure out how to get from now until 2028, and that's not going to help us. So, but I would think that that's coming because if you're a lessor that has plans to be in business for the next 20 years, you still need to figure out, year 10 to 20, right? Or year 5 to 20. I feel like it's coming. It's just a matter of time before there needs to be more of
But
that.
so much of this,
I mean, backlogs
we
are
always
full.
say, oh, it's coming, it's coming, it's coming. And then it always takes longer than we think it's going to be. But I agree with you.
Yeah. And I think that's partly also, when you talk about consolidation, that's another way of doing it, right? You buy somebody else's book. It allows you to kind of take some of that and depreciate those assets for a period of time. It's definitely an ongoing machine that just needs to be fed all the time. Otherwise it's not happy. And then people have to pay stuff and nobody wants to pay taxes on things. So
But I think you're in a really unique kind of position, experience level in this industry where I was talking to a group of network planners a couple weeks ago, and they said, yeah, like I remember like the generation that was here before us, they told us how bad it was during the great financial crisis. I'm like, the generation before you? Excuse me? Like 9/11, that was kind of my first crisis. But from the kind of the aircraft and financing perspective, granted, not so much a crisis, but if we look at it from interest rate perspective, you truly have like detailed experience in so many more kind of interest rate environments just from that specific metric alone than I would say, I don't know, Garrick, I'm going to throw out a number, what, 90% of the people in the leasing space today, how much of that is, I mean, we all follow the market to some extent, but how much of it is kind of rushing to get into that kind of zero or near zero interest rate environment, and then how much does it change going forward?
Certainly it's a completely different world. And like you said, all of these youthful people who have no real experience dealing with a high interest rate environment, just you wait, you'll see what it's like to get a mortgage at 15%, whatever. It is true that they really don't understand how it can get. And again, when we had high rates before the global financial crisis, we had higher lease rates too, higher lease rate factors. And so, overhead is still meaningless, SG&A, all of that. It's all about where you buy it, how much you pay for the aircraft, and how you finance it. And we had more wiggle room back in the day. There isn't any wiggle room today versus, where interest rates are. And yes, the lessors are, hanging on to IG ratings, which is fine, because you need that. I think they have to have that. But where are they in that IG spectrum, in the investment grade space, and is there going to be differentiation? It's always so funny when you go to some of these conferences and you hear all of the lessors touting their unique position. So many years of experience. And I love it. Everybody gets multiplied by 14. I have 1,000 years consolidated experience. I have the best relationships with the airlines in the world. I have the newest aircraft. Everybody touts the exact same CV for their company, but it is a commodity. It's a commodity opportunity. Yeah. And as an airline now on the other side, I don't care if I really like going out to dinner with lessor 1 more than I like going out to dinner with lessor 2. If lessor 2 has a lower lease rate factor, I'm doing the deal with him or her. I don't care. So it's the differentiation. I'm not sure how that happens between one lessor and another, but it's all going to be about where you can borrow. And I just, I'm not really sure. But to be fair, for those lessors that you mentioned who have order books, who have access to aircraft, when an airline needs it, that will be very important. But how many lessors can do that? Like you said, fewer.
Yeah, and it's not that many, exactly. And I think we're at least from talking to to some of the lessors out there, I think we're in the environment today where having an order book is very beneficial, because the lease rates that you hear from lessors with spec orders that are they're able to place new airplanes with airlines versus those that are doing sale leasebacks. There's a big gap between the two. And that to me is amazing. But yet, it's the what gets published out there, what gets talked about, obviously, is things are still pretty low. But I'm sure as an airline or in airlines in general, I think you have less leverage than you had before, right? In terms of if you need the capacity, there's only so many places you can go, unless you've got your own order.
Which is us, yeah. I feel United is unique, uniquely united, as we say, in so many ways. Yeah. We have a lot of power. We're at the beginning of our refleeting. When you think about what American did a number of years ago, what Delta has continued to do, we're really, we were late to the game for sure, because we had a different management, a different view on the business. And now we're really full throttle growing and upgauging and bringing on new technology, which is key. And yes, it's true that we've had challenges getting aircraft because of the issues that the manufacturers have had, both the engine and the airframe manufacturers. But make no mistake, that's where we need to be, is partnering with Boeing and Airbus and all the engine manufacturers, because there's nobody else we're going to do business with going forward. They may be having challenges today and opportunities to get things back on track, and we are there with them because they are vitally important to our future and our plans and our growth. So that's where we have to be, and that's where we are. And it's great when we get the aircraft. We're frustrated that we're not getting the aircraft when we want to, but it's great when we get them.
Yeah.
It is unique, and I would say not just to United. It's a U.S. thing, because the order books are disproportionately in the hands of the U.S. carriers right now, even if American's not playing ball and ordering aircraft between United, Southwest, Delta. They all have their fair share of aircraft coming in.
Well,
but that's not the case around the world. And they're almost left out to dry. So if you're a lessor, because, Pam came in and bought all your airplanes, sorry, where are you going to get one? And that's speculative orders on the lessor's
Well, it's really funny because for years when I was in the leasing world and people would say, oh, those old aircraft after, Air France and Air New Zealand and, Lufthansa are done with the aircraft, they go to third world countries, right? I'm like, well, they go to the good old US of A. Those are the folks who are flying
US
the
of A.
oldest aircraft. And so that's why the order book is so disproportionately weighted to the U.S. carriers because we've had to refleet. It's time. And what's interesting is not only refleeting, but holding on to the aircraft we have. During COVID, so many people were just shocked and didn't believe it when we said, we are not retiring any aircraft. We need all of the aircraft that we have. And in fact, we're going to make investments in those aircraft, whether it's the Polaris upgrades or whatever it might be, because this is temporary. Like every crisis we've been through, it will end. And we will need those aircraft to just continue on the trajectory that we had already started before COVID. And you start seeing these articles today, bringing back A380s, Lufthansa or whoever it is are going to be flying A380s again or flying A340s again. People that they're desperate for lift, like you said, and they don't have those order books. So I'm going to go from
Yeah.
Now, in fairness, it is kind of like cheating, right? Because you've got the 35 years, that lens to look through. Where, again, those people who joined in, say, 2013 and they thought, the Bitcoin halvening was the crisis.
Yeah.
You're like, this is nothing. But it is that perspective, right? I mean, that does bring a lot of perspective to through COVID. COVID was obviously, historic, right? Truly, you kind of had to go back to World War II numbers, and then you're like, is aviation, does it really count back then? But the closest, when we were going through it and we went back to look at comparisons, it wasn't the Great Financial Crisis.
Oh, yeah.
It was 9/11. Those were the most kind of similar comparisons to the market. And that market, even through the challenges between 2001 and really 2010, the market kind of stayed flat during that period.
Well,
the aircraft market came
but it was
back.
also different because September 11th, it was a different attitude. And I remember the day after, the Treasury window just was wide open and you could get commercial paper, which was one of my biggest funding sources. You could get commercial paper for basis points. They just made sure that we all had access to capital immediately, whatever we needed. And that was very much we're all in this together and we're all going to get through it. And then, interest rate spreads did gap out. I remember I did a bond deal right before September 11th. We always did really short stuff. It was a 2-year floater. And it was LIBOR, which also is going to be antiquated by the time this airs, the term LIBOR. Now SOFR. See, things changed. I remember before the euro. But anyway, we did LIBOR plus 12.5 basis points for like a 2-year floater. And in October of 2001, my underwriter's counsel called me because he had the draft prospectus. And he said, Pam, I think there's a typo. It says LIBOR plus 125 basis points. And I'm like, no, that's no typo. That's what happened within a matter of months. And, spreads just gapped out. And, that was the environment. And there was a time when we could not raise money from any source. And I had to do some pretty crazy things to just get money in the door. But it is a cautionary tale because during COVID, I was pretty steadfast in that don't do a bad deal today because you think it's the only deal you can do. Do a deal that you can live with. You may not like the rate. The rate you will be able to deal with, but if you put in structural limitations or handcuffs, you're screwed. Because then when things are over, how are you going to undo those? People love to handcuff you in what you can do and what you can't do. But they don't realize even that by doing that, they're hurting themselves too. So learning,
Yeah.
I mean, that's a lesson that I think young people coming into this industry do not believe this is forever, because nothing is forever. So be strong about the terms that you agree to during the tough days.
The one little bit in my short contract negotiating experience, the one kind of piece of advice that I kept with me as always is, if you read through something, never ever say, well, that'll never happen, because you just guaranteed that
That
it
is
would.
true.
Yeah, no, absolutely. Yeah. It's interesting, right? Because as you say, a lot of the young folks that are coming in just don't have that experience. So as you go through something like COVID, right, you're probably going, oh my God, we need to, like, somebody's saying that they'll do this for us. We need to do it right now because we don't know how much worse it's going to get. And that's how you get into trouble, right? And that's, I think you're having that experience is probably where the value comes in, where you're like, well, no, let's wait it out. Let's see what happens, right, before you make any rash
Right.
decisions.
I mean, you can take a fatalistic approach as well, that, well, the worst thing that can happen is that we're gone. So it doesn't matter what we agreed to, but we're not, we
Right.
don't have that view. We're all going to,
Yeah.
But that's liberating in its own right, right? So why sign the terrible deal if, like, we had a lot of conversations last spring at all of the various ISTATs where they said, yeah, well, what if Russia launches a nuke? Like, then what are you
exactly,
worried
it doesn't matter.
Like-
Again, getting
Like-
insurance, getting war risk coverage, well, you mean a tactical nuclear weapon, where I am still going to be going to Miami for my winter vacation, but other people are going to be, it's just not, it's really not a great way to think about things, but.
Yeah. No, that's great. So you mentioned before, kind of retirement of aircraft. I remember at the start of COVID, right, everybody wanted to know, what do you think is going to happen? And so I remember putting together this like retirement forecast, and I think it was something to the order of like a couple of thousand airplanes that could potentially retire, and yet here we are today, and I think only a fraction of those have retired, right? And it's crazy the difference between when you're going into it thinking like, okay, the world's going to end, everything's going to get retired, right? And then yet all the things that have happened in the last 3 years that I don't think anybody could have guessed as to what happened. And here we are today where, airlines are trying to hold on to whatever they can. We just don't know when we're going to get our new airplane, right? And that's the challenge. And I guess that'd be my one question to you is, what, I guess from your standpoint today, like what are some of the bigger challenges that you guys face dealing with all of this, right? Trying to grow the airline, trying to do everything else, right? What are some of the biggest challenges you see?
Well, there's always going to be sort of those big structural things, like can we get all the aircraft that we need for our growth and ASM commitments going forward? And, are we going to be able to get the pilots we need, the employees we need? All of those things have been really top of mind and have been in the news. It is all of the things that we just can't see that put us at risk. And I'm thinking about just all of the social media issues that, we can do 99.9% of the things right every single day. Getting all those airplanes flying and going from point A to point B every single day, but it just takes one person to, put out some sort of negative whatever, or one news story that you just can't control. And that's what worries me, is that kind of stuff that is, sort of beyond what we can control. It's anything that we can't control. I mean, I worry about interest rates. I worry about access to capital. I worry about there being a volcano in the Aleutian Isles, which I guess just happened, a volcano erupted, which is going to screw up things. There are always...
you can't fly over
you can't
Russia
fly over
anyway.
Russia anyway. I mean, we have a whole analysis, about, what we can, without being able to fly over Russia, what does that do to some of our routes, specifically to India, et cetera. But these are all things that are sort of reality-based, and we can plan for them. But when we think about enterprise risks, there are just so many weird things that happen and the way people behave today that just make it sort of crazy. So that's why you ignore all that stuff. And I just try to live with the things that I can control, or at least I can be aware of and take evasive maneuvers with, I mean, one of the things, just talking about interest rates, talking about access to capital, that's why United has made the commitment to itself to have so much cash on the books, which is different from some of our competitors in the space, because we want to be in control of as many things as we can control. And in your personal life, you know it. My mother taught it to me when I was a kid. Cash is king. And if you have cash, you have the power. You can do what you need to do. You have control. And so having as much liquidity and access liquidity and asset classes that can be tapped as collateral for more liquidity is something that is vitally important to me as the treasurer of United. And that's sort of, to me, the biggest protection that I can offer to United Airlines, to my employer, to the board, to the shareholders, is that whatever happens, in as much as we can control it, we will, by having cash and liquidity. So, I can't figure out what's going to happen on social media tomorrow, and that's why it scares me. But it doesn't scare me, what's happening with the bond market, because I can deal with that.
Yeah, it's true. No, nobody knows when the next exploding diarrhea thing pops up, right? I mean, it's right.
Listen, I feel bad. Whoever that was, I just feel terrible for him.
Yeah, that's all it takes, though. But you're right, and that, I guess the you got to wonder, does that from the social media aspect, right? Is there a point where that changes? Because everything changes ultimately, right? There's different fads, different trends, right? And what's the next thing that's going to change? But it's true. It feels like with social media today, you can't really do anything without anybody noticing it. And so at what point, it's kind of like it's a necessary evil right now, because you feel like if you're not on social media, then you're not in front of the people that you're trying to kind of get to consume your product, right? But at what point does that change? Just because it's kind of like, well, anytime we do anything, somebody's going to have a problem with it. And so we feel like we can't do anything that's right ever. So just cut it out, right?
In fact,
It's certainly a bigger risk than it has been before, but how much of this just speaks to how much all the other risks have been managed, that this is now kind of the bigger challenge? I mean, you mentioned cash on the books, and I'm trying to think back. Like, man, when was that the case with like any airline other than Southwest, right? Like cash, what? That's insane. Why would you not leverage yourself? That in itself is, Jamie Baker kind of mentioned it as, it's the new reality of kind of stewards of capital. Airlines as stewards of capital, which is a very recent, I would say last maybe 10 years. COVID kind of, scared Warren out of the space, Warren Buffett out of the space. But that kind of started, I'd say, post-mergers, plural. But to consider the airlines as kind of the stewards of capital, and to have cash on the books, and to see the cash itself as leverage and diversifying, the ability to diversify the instruments. That's really
well, it is. I mean, you had to be incredibly creative, and United, I think, was the most creative ones out there when it came to looking at those different asset classes and what was the art of the possible and taking advantage of all of them. And now knowing that those asset classes can be used as collateral time and time again, because many of them, aircraft definitely depreciate. But even then, we were able to take aircraft that had already been used as collateral for WTCs, for bank loans, and we're at the end of that, and we leveraged those assets. So that's one chunk. And then obviously slots, gates, and routes, which is unique to the airline space, but it is valuable today, and it will be valuable tomorrow and for the foreseeable future, because if you don't have routes and slots, you're not going anywhere. And then, of course, the loyalty program. And when you think about the cash that is generated through those frequent flyer programs. And I know there's a lot of conversation about them today, broadly speaking, but they are big, providers of liquidity and cash, and taking advantage of those income streams is something that was new through COVID and was started by United. So it is a different world. And stewards of capital, investing incredibly conservatively is something that I have always advocated and required, and that's why it's all about a return of capital, not a return on capital. And because no treasurer has ever been promoted for getting an extra basis point return, but I can tell you with 100% certainty, treasurers have been fired for losing access to their liquidity. So I'm not going to be one of those treasurers ever.
That's good. Yeah.
That's a really interesting way to look at it too.
Yeah, it is. Absolutely. I mean, and I will say, I do think that over the last, and it's not just through COVID, but I think over the last maybe 5 or 10 years, I think airlines have definitely found, innovative ways to kind of keep themselves funded and finding different sources of revenue, which is pretty amazing when you think about it, just from going from, we collect revenue from selling tickets to, no, we're going to collect revenue from every different aspect that we think we can get through differentiation, through whatever it is, which I think is the way that I think airlines have to, continue to, and I don't know if you can say survive anymore, because I think it's thrive more so than survive. So that's been an interesting trend, right? I think over the last 10 years. Well,
I think what's happened, and again, this is where my leasing days sort of come back and help me here, is that we are no longer just financing aircraft or financing corporate real estate, at our hubs or, at our stations. We are financing the business. And it used to be very segregated, that you had working capital, which was basically your ATL, your advanced ticket liability. That's how you paid for things on a day-to-day basis. And you separated that from financing aircraft, and they were just never the two shall meet. And now it's sort of this idea of working capital. I don't really subscribe to it. It's more just, funding the holistic business and, thinking about different pockets and what do we need as we build a dynamic liquidity cushion or buffer to basically make sure that we can cover all of those things that are important. A hike in fuel prices, another COVID, other regional pandemic, or whatever it might be, we need to have access to cash to cover those things, separate and apart from just relying on the advanced ticket liability. Because guess what? During COVID, there was that holy moly moment, knowing this is a rated G presentation, where we going to, kids would be interested in this. Oh my God. And my kids. But there was that now I totally lost my train of thought. Where
I think you're talking about,
you have to give those back.
When they get the bookings.
They're not going to give back to the people who aren't flying.
Yeah.
And it didn't happen that way, but it very well could have. And then what would happen? So you have to think about things very differently. You're absolutely right.
Yeah.
And that I remember distinctly. I think it was ISTAT of 2020. And I ran into, I think I've told this story in the podcast before, but I ran into Jude Bricker in Austin at ISTAT, and it was the first moment that it hit me, because Jude, he's friendly, and he's, Jude, hey, how are you? And he goes, I'm not good. I go, oh yeah, that's good. He goes, no, it's terrible. I said, things okay? He goes, no. I said, bookings not good? He goes, negative. I said, bookings are down? He goes, bookings are negative. This was like the day, right? The day before that NBA player touched all the microphones or whatever, like that week, when we all realized, oh no. But then you start to think, just like you were talking about, the working capital, right? The advanced ticket liability. Like suddenly that's why it's a liability. Like, 'cause it could go back. You may not be able to deliver on that.
Yeah, I distinctly remember that trip because I had to leave early because We obviously had things that were very pressing, and we had to go into fundraising mode, and so we left early. And then, interestingly, one of the lessors followed me back to Chicago because he also saw that there were problems and he wanted to provide us capital. And one of the good things about not ever having done a lot of business with the lessors was there were a lot of people who had a lot of capital that they could provide to us. They were not full on the United name, which I think is also really important going into the crisis, how lucky we were. It's better to be lucky than smart, but smart enough to know when you're lucky. So we took advantage, which was great.
I like that. And the other kind of thought of, you mentioned kind of having cash on hand, planning for the next potential downturns. Why? And I wholly agree. Like, why the unseen problem? I mean, we know what happened to Budweiser and Disney and all sorts of just brand, I won't call them implosions, but trouble, like the things that you can't see. That's very different from like another COVID. And I think it's different and I guess the question to you is, when I think of the types of challenges that you could be that could be on the horizon for aviation, I think of them in terms of what could be unique airline challenges, like only hit an individual airline, and what would be industry challenges. And what for the industry challenges, it's not I need enough money to survive. It's I need enough money to outlast you, because then you go away.
Outlast and buy you for pennies on the dollar. That's the other thing.
Yes.
I need to do both. It was the whole Cold War. Russia ran out of money and the US didn't, or they didn't have a choice, and the wall fell down. And again, we're talking about things that are predating a lot of people in our industry. But
whatever happened to Russia?
The Soviet Union, yes. But it is true. You have to outlast, and we also, during the early days of COVID, I mean, we sat in my office. We had a cash conservation team who literally went through the accounts payable and said, who do we need to pay? Who can we not pay today? And, starting with, $5 million as the limit, then moving down to $3 million, whatever. So outlasting is key. And, that is also part of the analysis that we do when we look at the liquidity that we have, is what is our burn rate? Because there are variable costs and there are fixed costs. But those variable costs are fixed once you get to a certain point in time. They only turn variable again if you've got more runway to see them coming, that you can shut them off. And so there are a lot of costs in our business, and especially if you want to keep the employees paid, which is that was key for us.
Those
that
pesky
was exactly
employees.
what I was thinking. Like, pilots and flight attendants tend to be classified as variable costs, but
Correct.
they're not really. Like, you can't, there are, compensated on an hourly basis, through their contracts. But when things get turned off, they're now fixed. Like, there are minimums. And so it just completely reverses how you consider all those different types of costs like that. Whatever maintenance costing you were doing on an hourly basis must have been out the window. And you're like, what are our calendar events? What are our calendar? Like that, it just, everything changes or changed overnight, I guess. Hopefully we don't have to deal with that anytime soon again.
Well, until the next thing that we have to deal with. But which, so I guess a question for you, Pam, in terms of, I mean, I assume you've got, a pretty decent team that works for you, where you've got various age groups, right? So how do you prepare the younger generation to have a better understanding of what to do going forward, right? Because you've been through it kind of in different ways over time. So how do you go about kind of trying to get them to understand, so that, hey, look, at some point, right, I'm gonna retire, I'm gonna do something else, right? But for your benefit, you need to understand this so that you don't have to remake mistakes that I did 10 years ago or 15 years ago, and you don't have to start over again, which I feel I think, over the course of COVID, there was definitely that phenomenon of kind of the brain trust that left, the manufacturers, the MROs, right? And so all of that experience kind of went away. But so how do you kind of keep that moving along so that, 10 years from now, people don't make the same mistakes?
So first of all, everybody needs to be in the office. Mostly just because they need to see how things work. And, it's little things. It's little things that, like, I was on a Zoom call with somebody, and I had one staff person sitting with me, and, 3 levels down. But he happened to be in the office, so I'm like, come in, let's do the call together. And he was like, what does MFN mean? What does this mean? What does that mean? And after the call ended, we could talk about what all of those things meant. So, you get just the practical stuff. But, making also, and I think I'm in a great position because United is the place where people want to do business. So, whether it's the banking community, the lessor community, whoever it is, they all want to do business with United. And so staying strong and sure about your position when you're negotiating that, no, we need to not give on these points because we're right. We have a business reason and we're United Airlines, goddammit, and they should do what we want because we're the best. And they want to do business with us. Yeah. Building people's confidence. I mean, coming from ILFC where we were the best and we knew we were the best and we were the premier aircraft leasing company. That's the way we described ourselves. Not the biggest, but, the best. And, United is the biggest and it's also the best. And instilling that confidence in my teams, and I run 4 different groups. Not all of them are outward facing. Not all of them negotiate all of the time, but many of them do have negotiations. And it's continuing to remind all of us that we're the best and people want to do business with us. And we're not talking about, making it so that people are losing money doing business with us, but that there is a way forward and we should get the better side of that in a negotiation because we're United Airlines. So it's instilling that confidence in the younger folks and also that everything's going to be okay. The sun will rise tomorrow, to sing an Annie song or, variation, but that reminding everyone that it's all going to be okay eventually. Maybe not tomorrow, but eventually it'll be okay.
Yeah.
So next time I see you, and I probably will forget this by then, but I need to have a T-shirt for you that says United Airlines Treasurer. It's like the old bomb squad. Like if you see me, try to keep up. But if I'm not running, or if I'm running, try to keep up. But if I'm not, it's fine. Just chill.
Yes. Well, and when I was at ILFC, this used to happen every day during the financial crisis. People would come into my office and say, how did you sleep last night? Are you okay? I had external investors call. They didn't even want to talk to me. They asked my assistant, is Pam in today? And if they said yes, they said that's all I needed to know. Because if I was giving up, they were giving up. But they wanted to make sure that if the treasurer of a finance company was still coming in and still making it happen, that they were okay. And I literally got a LinkedIn note from somebody about a month ago who was a huge investor of ours, who was reminded of me and said, Pam, we stuck with you and we made money on our investments. And it was like $150 million of bonds that we were going to sell and we held. And as a result, because you kept it together and you kept us confident that they were going to get paid out at par at maturity. So, the sun does come out and United is perfectly placed to see that sunrise from one of our airplanes, many of them. How is that? That's a great, great ending, isn't it?
The sun, no. That's a great beginning. That's the sunrise.
Yeah, that's right. Go off into the sunrise.
But I don't want to go too far past an amazing point you made, and this is a little bit tangential, but being back in the office. firsthand. I happen to be very strongly in agreement with you on this,
Says the man who
which
doesn't
is
work in
unfortunate
an
because it makes
office.
for poor podcasting. But for all the reasons that you just said, I have so many people come to me. They're like, "Oh, I can't. They won't let me work remote anymore. I need to find another job." So that's great, but are you prepared to compete against everybody in the world for your position? Because you're now in the global labor market. Whereas if you go back in the office, you're in your local labor
Good point.
market. But just we mention it the term water cooler conversations. That's kind of what it's called, but it's everything. It's that conversation you have. It's the confidence. It's going into negotiations and knowing, knowing because you have extreme rapport with your team that you truly are representing the interests because you know exactly what they are. You interact when there's not a specific reason to interact. And I think the teams that do that over the long run, I think 20 years from now, we'll look back and be like, oh, yeah, they did better.
Well, so I make it a point. So I'm not in the office today. I try to go in about 3 days a week. And so we're not stupid. We know that there's a new world. There was an article in Wall Street about what does Friday mean now, to people. So for those 3 days, I make it my business to go out and chat with every single person who reports up to me, who is in the office that day. And now, to be fair, I have a whole team that's down in Houston, so I can't really chat with them every day. And I don't have huge teams. That's also true. But I try to say hello to everybody and have at least, how's it going, whatever, what are you doing, with everyone. And with some of them, I obviously have more to do on a daily basis. But if they're going to come in, I'm going to make it at least another reason why they come in is just because I see them and we chat and there is a relationship, because we have to start building them, because there is turnover now in the workforce. And these are not that team that you had when COVID first happened and we all knew each other and worked together. We now have new people.
Right.
So it's important, and it's incumbent upon the leaders to be there for folks. And, I still have people.
Sign me up for the old-fashioned club.
Yeah. Well, I wait, what about the
Yeah.
Hold on. What?
No, just Garrick and I. You're clearly in the young up-and-comers, but we're in the old-fashioned.
Well, and also I like
Yeah,
to
yeah,
get dressed up for work, so I need a reason to go buy new clothes and go shopping so I can wear them in the office. It's important.
Yeah. Well, there's something to be said about the office interaction, right? I mean, I've been working from home now myself, just working for myself. So it's not like I have I go into the office and I chat, but you do miss that interaction. There is something to be said about that, and having the ability to just go into somebody's office and go, hey, you know what, I was thinking about this. What do you think?
Yes.
Which you don't get from, hold on, let me go click and either do FaceTime or get somebody to sign up for a Zoom call, or it's not the same, right? And I think that's why I think laughed at the beginning of COVID, where it was like, oh, you know what, everybody's just going to be, going through Zoom or Teams, or it's never going to go back, right? Nobody's going to travel again. And I'm like,
We'll never travel again.
we've been here before, right? After 9/11, video conferencing is going to be the next big thing. And you're like, yeah, how did that work out, right? I mean, you know what?
Yeah, look at us on a video conference. The irony is palpable.
I know, yeah, it really
There's
is.
a time and a place for everything. So that's what.
But that's so.
Go on.
Go ahead. I'm sorry, Pam.
No.
I keep interrupting.
You go.
She made me. No, I think it was, especially if you look at during COVID, and this is just a great example, right? You talked about, kind of finding, not your words, but I'll paraphrase, kind of finding that base level of, okay, what's really happening here, and working from that, so that you're not in the up and down all the time. But kind of this work from home is a great example of that, because it is different now. Like, we also have to acknowledge that. You mentioned the 3 days. I think that is spot on. Not right or wrong. Nobody should ask me what's right or wrong.
We don't.
But just in the terms of the trend, and by the way, if you go back, the long-term trend is in that direction. During COVID, it was, nope, 5 days from home, we'll never go back. And then there's we'll be back 5 days, 9 to 5. Sorry, that's all it is. And that 3 days, the world, and still we're oscillating around it, but it really feels like it's going to settle around that 3 to 4 days in the office. Where else in just our industry, but everywhere else, do we see those oscillations that, by the way, COVID just kind of, they happen all the time. COVID was just so obvious, where that experience really kind of comes to the forefront of knowing where that steady state is as the world kind of oscillates.
Yeah, I mean, we try to make it so that you're it's a touch point to come into the office if you have meetings or whatever, but we all need just to hang out and be together. That's why, like, ILFSTAB is so important, and it continues to just attract so many people because everybody wants to hang out and be together. And so you see all of those events. Before COVID, they were always popular, and they continue to be popular because people just want to be around each other. It's fun. So, we're social. We're social animals.
Yeah, we are. Absolutely. I have a very hard time convincing my wife that I'm working when I'm traveling because she knows that I'm having fun. She goes, yeah, go have fun with your friends. Go. I'm like, I know, man. Yeah, you just can't do it, right? Because it's true. Everybody's very excited, especially that first day, right? You get there and you're like, oh, am I going to see? Oh my God, I haven't seen this person. And so, like, you're just so excited to talk about stuff. And that I don't think that's ever going to change, right? Because we're all excited to see each other and share things that we've dealt with or that we want to know about, and that's what makes it fun. That's what makes it interesting.
And guess what? We're allowed to have fun at work, and we're allowed to say that work is fun, and why not? And it's So I think that's also changed. I love my job. I have fun doing my job, and I can tell you that was not always the case. And so being able to have fun, a part of that is being with other people. And one of the things that I do now that I didn't even know I would like to do is all of the mentoring and advocating and alliance building, whatever the terminology is, because there's a lot of it. Allyship, that's another thing, is really exciting for me. And you talked about it earlier, Courtney, just, the younger folks. It's not even the people in my org. It's all of those other organizations at United where people have heard me speak or seen me or met me or have heard that, I have different experiences and just want to get some guidance or just want to, think about what their future is going to be. And I love doing all of that. And I didn't have that at ILFC because, there were 200 people and we all sort of knew what we were doing and it was whatever. But at United, it's a much, 85,000, 90,000, whatever it is today, employees. There's a huge number of those who are trying to figure out how they can have fun, but how they can be successful and do well. And I love being a part of that for the young folks.
The young folks,
When did you join United, Pam?
Well, when did I join? January of 19.
Yeah. Oh,
wow.
So, you kind of had a probationary period and then straight to the Wolves.
Indeed. But again, it was perfect because they couldn't have hired a better person who was calm in the face of crisis because I'd only been there many times before.
Yeah, been there, done that. Wow. Yeah. Can we shift focus a little bit? And I don't know how much time we've got left with us, but
I don't either.
just want to make sure we're not
I think
going.
we're okay. Let's see. Yeah, let's just pretend we are.
Great. So I would love to touch on a topic I think that is and has been kind of in the news and everything else. But when you kind of focus a little bit on ESG, right, and the kind of the green aspect of our industry. So you're in an interesting position where, as you talked about, you've got an older fleet, right, that you're hanging on to, and yet you're also investing in, brand new airplanes. And so how do you navigate? And I know you guys have done a lot of different things to kind of, go through the ESG environment, but I would love for you to maybe talk about that if you can, in terms of, because you do have very different spectrums within United itself, in terms of some being older things, some being younger things. It's like, but how do you navigate through that and ultimately kind of move in the right direction?
So if we're just talking about the E, the environmental, what I am most focused on is what the operation is doing, whether it is SAF or using electric vehicles or trying to reduce the weight on our aircraft, with the product offerings we have. Certainly, flying aircraft as long as you can is, one of the best ways to save energy, other than the fuel price or the fuel cost, because, just not building a new airplane saves a lot of energy. But knowing that we have to buy new aircraft, making sure those are the most fuel efficient aircraft available is also super key. The United Airlines Ventures, a fund that we started to invest in all of these nascent technologies, whether it's carbon capture, whether it's electrification, whether it's SAF, whatever it might be, those are all vitally important. The one thing I'm leaving out is the key performance indicators used to support financings, green bonds, all of those things, because guess what? That's not how we're going to make a difference. That to me is just window dressing. It's not real. It's not right. I should not be the one dictating to my operations how they do things in order to check a box to get theoretically better pricing on a bond or a bank loan. So I believe that I stay in my lane on this, which is to do the most cost-efficient financing I can, and I'm going to let the experts figure out the best way to reduce our carbon footprint. So I feel pretty strongly about that. I can go on and on why, but I think it's best left to the folks who know what they're doing and not to be dictated by me.
Do you think that it's not a luxury? I don't want to call it a luxury, but do you think that ability to control your own future, I guess, is what I'm thinking from an ESG perspective, is the same for, say, like a European carrier? Are they playing in just a different financing environment? Maybe their investors are pushing them in the direction.
Certainly, there is a very different political, set of rules that they have versus the U.S. today. And so you're right. It is a luxury for me to say I'm not going to restrict myself unnecessarily or put in these KPIs that may or may not be real, because I have other people doing real things that other carriers in Europe may not have that luxury. You're absolutely right. But I do think that there is a realization that people are coming to that there is only so much we can do, and we have to be thoughtful about the best way forward and not to kid ourselves about the fact that airplanes use a lot of fossil fuels and everything else to fly, and you can't plug in an airplane, and use, electric power. The battery technology doesn't exist. So, but it is harder for them, but they also have different infrastructure. There is a rail option in a lot of those countries where there is not in the U.S. I mean, the conversation around the train that is going to go between Los Angeles and Las Vegas, that's just to get gamblers from LA to Las Vegas. It's not, it's not a corridor like a Acela or anything else. And guess what? It's not even in Los Angeles. It's starting in Rancho Cucamonga. So for me to get to Rancho Cucamonga from LA, you have to drive there. So it's like, we are so far behind in the rail alternative that we really can't even talk about those kinds of things yet in the U.S. When we're prepared to make those investments and the NIMBY behavior, not in my backyard, it's just, you can't do anything in the U.S. without a whole bunch of people getting upset. And so we are operating under different rules than what's happening in Europe, for sure.
That's it.
Yeah.
I happen to live in the U.S. And I understand very, very well what you're talking about. Garrick has heard me go on and on about this, but on the ESG perspective, and actually I've used United as an example in this case. where I can't remember if this was pre-COVID, but you mentioned the carbon capture and some of the attention that's paid by United in that arena. And I think, some of the pushback at the time, I remember like, hey, stay in your lane. You're an airline. Oh, you're just greenwashing. But I thought, well, wait a minute. If the whole idea is to reduce carbon, then that dollar is better spent no matter where, in what industry. That dollar can remove more carbon, probably in carbon capture, rather than spending billions to develop, say, a new aircraft program, which we will continue to do. It's not that that's not going to happen. But I don't see any reason why our ESG or our environmental, to make a distinction that I agree with, you made well, should only be limited to aviation. It's global. So carbon capture, or just approaching the idea with just kind of a logical level of thinking, like you said, the operational perspective. Whereas on the flip side, like bonds, like, oh, this is a green bond. Have you bought enough green bonds today? Well, what's that? Like, for what? Yeah. I mean, what is that?
Now listen, if somebody is buying a bond and an infrastructure product, like whatever it is in solar panels or, wind farms or whatever it is, those are truly green bonds, right? I guess. But for somebody to, like you said, greenwashing is not what United does. Because what we're doing is setting up these, United Airline Ventures, where we're doing these investments in these new technologies, because then they get to rely on the United brand, the United name, the United folks to help them, and it's a great mutual relationship to find the next SAF opportunity or better efficiency there. So I just think that's where we need to be, is in practically just doing the work as opposed to filling out a form.
Yeah. Do you think the level of communication needs to improve? Because I feel like it's very easy, and people do it all the time, to point to something to say, look, yeah, these guys are flying airplanes that are getting close to 30 years old. Right. They're not being efficient. Right. They're the ones that are polluting. And yet, to take United for an example, you guys are doing so many other things to, kind of be part of the solution, not be part of the problem. Yet I feel like people just very quickly and easily go to certain aspects of our industry that are viewed as more polluting or more consuming, and so I don't know if it's just if there needs to be just better messaging out there to be able to educate people in terms of what everybody's doing, because it's not just one thing, right? And I think maybe people, that's part of the problem. People just focus on, well, what's the one solution that you guys are doing? It's like, no, we're doing all these different things that ultimately will get us to the goal that we want to go to. But it's not just one.
Well, have you met our chief trash officer, Oscar the Grout? Have you?
Wait.
You don't know about?
Oh, wait a minute.
You guys don't know about him?
This isn't like
No.
Oh my God.
Right?
We have a chief trash officer, Oscar the Grout. Go online. You
Oh, now we're going to have to.
You obviously don't fly United, because if you did, you would know all about. And in fact, the woman who is our chief tax officer, who reports to me, she keeps getting mail to Oscar the Grouch as the chief trash officer, the other CTO, which crap for us. She forwards it to our media folks. But oh yeah, we are serious. You're absolutely right. You have to bring this message out in a way that obviously isn't getting to you guys, but that is getting out there to all of the different age cohorts and everything about our commitment to, in this case, sustainable aviation fuel. Oh, you absolutely need to see the media that we've got on Oscar the Grouch.
We'll definitely, we'll definitely have to go take a look there.
This is the first I'm seeing this.
See, guys, you need to do better research on me when you're vetting me. You gotta know. You gotta know that's free.
You know what we did not think to Google when we were researching you? Chief Trash Officer. Pam Hendry, Oscar the Grouch.
Yeah, I would have gone.
Nothing. Yeah.
Right,
Never thought.
yeah.
Yeah. Sorry we missed that one.
I should have known this. I didn't realize you guys had this campaign.
Absolutely.
Going. It's really interesting. Now I live in Dallas.
Yeah,
That's
listen,
my
I can't fault people for who they fly and what they do, but certainly I can make them feel a little bit guilty about it. You should be flying United.
Yeah, as you should.
Yeah.
As you should. Absolutely. Yeah. Well, I mean, look, I think I know Courtney's done some work on this in the past, kind of showing ultimately how the industry, gets more fuel efficient, every year. And ultimately it's not really that the industry isn't getting more efficient. It's just more that the industry likes to grow into, kind of where we were before. Right. So I think one of the charts that he had kind of shows the fuel consumption and ultimately how it's kind of even keel, even though we've gotten this much more efficient over the last 20 years. Right. But I think it's those messages that don't necessarily come across as often, and so it's very easy to point to, well, here's what you guys are doing as an industry, and boo, and you shouldn't be doing this, and all right, yeah, just pay attention, right? And which obviously to your point from our side, right, pay attention to the chief trash officer, which we missed.
Indeed.
I'm gonna have to hand in my AvGeek card. I know it's gonna be demanded now. That's as much time as I spend, and I do a lot of stuff on the airline side, kind of in other work, and this is news to me. But yeah, no, it's great. It's also kind of unique to kind of the approach that United has taken.
We're very focused on it. We're very proud of what we've done and what we will continue to do, and we have a lot more work to do. And so, certainly, flight shaming is when you went back and asked me that question about what else I worry about. I certainly worry about that. But again, in the U.S., it's just hard. There are no other options because it's certainly not efficient to drive your car from LA to Chicago on a weekly basis. So.
Yeah, absolutely. Yeah, and electric cars is not necessarily the solution either.
Yeah,
right?
I don't.
Everybody talks about electric, and ultimately you kind of go, yeah, but where do those batteries come from? How do those get made? And how does that get recycled and all that other stuff? So it's like, okay, well, maybe that's not the all-inclusive answer of like, that's it or nothing.
It's walk. So. You should walk everywhere. So there you go.
Yeah. I mean, that's...
I ride my bike, so I'm...
Exactly. Whatever we can do. It's not going to... We can't do everything, but we can each do something. That's all you can do.
Yeah. No, absolutely.
And this is where the conversation very quickly goes down a slippery slope, especially with the airlines, because yes, the airlines absolutely could eliminate their carbon footprint overnight. They just turn everything off.
Stop flying.
We just stop traveling, right? Well, okay, now so to solve for E, we screwed up S, right? Okay, so that means that there's some balance between environmental and social. Look, we know this. So where is it, and how do you have that conversation? And then kind of deeper into that conversation is, okay, how do we kind of responsibly address the areas that should be without, the green paper, I think is a great example of what exactly is this green paper I'm buying or leasing into. And it's a conversation that we'll be having for decades for sure. I mean, it's not anything that's going to go away either. I don't necessarily expect.
Well, Pam, this has been really fun. I am glad that we got a chance to speak with you, and you had the chance to kind of share the fact that passion was nowhere in your in your thoughts when you got into aviation, but we're certainly glad that you stuck with it for 25 years at ILFC and then beyond. So otherwise we wouldn't have had the chance to speak with you today. But this has been great. So thank you very much for taking the time, and we're certainly looking forward to whatever else you guys come out with, and however else airlines evolve to do the next thing, right? Until the next downturn that we hit,
we
right?
will. We always do, and we will always come back. And
yeah,
it's been a pleasure spending time with you all. You guys are are a lot of fun to hang out with, even just virtually. So I look forward to seeing you in real life soon.
That sounds great.
Yes. And apologies for missing Oscar the Grouch. You can send us a big bird. You're a delight, Pam. Thank you so much for joining us.
Thank you
This was
both.
great.